Hi everyone, this is Michael Bengiat, and this is the Stock Picks Weekend Review video for March 12th, 2022. So in this video we're going to go ahead as usual. We're going to talk about the current market environment, but I left the current positions and ready and watch list reviews text here because there are actually no current positions we're in and there's no stocks on the ready list. So it's kind of just a subtle reminder that this market has been really poor, and there really isn't a lot to do, which is good because we don't want to lose money. So this is an environment where it's very easy to lose money and difficult to make any money. Okay, so we're going to get into it. Before I start though, I just want to give you the disclaimer that the content and information in this presentation is provided for educational, informational purposes only, and in no way should be considered investment advice. Okay, so let's take a look at the update from Friday, which was yesterday, March 12th, and the risk level is still red. The best strategy is still just to sell into short pops, do shorter term swing trades. Even those have not been working, so we have a recommended exposure just really nothing, 0 to 5%. As I mentioned earlier, there are no stocks on the ready list. It just shows you the continuing action and poor action in stocks. So we just have to have patience and wait until the market conditions improve. I did want to mention that, so for 2022, we had let me back up for a second. We actually got stopped out of our last position over here on Friday. And I think that was 7 in a row, 7 losers in a row. Now we've been putting on just small positions, pilot positions, so it really didn't hurt us much. So, but it's just telling you something. It's telling you the market's poor, and even the strongest stocks, because we're buying stocks really with just relative strength in the 90s. And a lot of times they're the RS Blue Dot stocks, which means that the stock's relative strength versus the S&P is actually making new highs while the stock is not. It's still in a base. So it's a very bullish situation I've talked about many times. So we're buying the strongest stocks. These are stocks that are in uptrends. They're breaking out to new highs, unlike many other stocks, which we're going to show you in a minute. And they're even not working very well. And we're also in the top industry groups, oil and gas and some of the chemicals, things like that. So really, when they're not working very well, it's a terrible, terrible market. So far, as of Friday, our year-to-date return is minus 3.02%, but the Nasdaq's down 17.90%. So we're outperforming, very strongly, but of course we'd like to have positive returns. But the whole idea, when the market's poor, the idea is to lose as little money as possible, have your capital ready, and then be ready for when we turn back to a strong environment. And part of all this is you have to listen to the market. When you start having lots of losers in a row, it's telling you something. If for inexperienced traders, they tend to go, well, I'll just keep doing it, and they just keep buying more and more, and they buy bigger and bigger. No, you have to buy less and less and less. It's telling you something. If you're not making any money, you don't keep putting more money in. And conversely, if you're starting to make money, you want to kick it up. And so when the market's really strong, that's when you should be having the most exposure possible. And when it gets weak and turns sour on you, you should be getting out and having less exposure. So we've been just doing this for a long time now. It's months, because this market really has been poor for a long time. So that's the idea. We're out for now, and we're going to continue to watch, and we just continue to build our watch list. And there's really nothing set up right now on the ready list. So that's where we are. So let's take a look a little closer at what's been going on too. So this little chart here is showing you the top 40 industry groups. And as I've been mentioning, you can see looks like the top 10, or really the top 13, is oil and gas stocks, oil and gas chemicals, energy, coal, some mining stocks. You see media, periodicals, medical wholesale. A lot of these are food and grain related, utilities, a lot of very defensive names, or they're cyclical names. So we've been trying to find the best stocks in all these groups and not in these groups. Now, this is the worst, the worst ones. Normally, these are the ones you see on the top 40. We're getting all the real strong growth names, integrated systems, security software, cyber security stocks, lots of software stocks, healthcare stocks, telecom, retail internet. That's usually one of the strongest ones, and it's last on the list. So these are the names you don't want to be part of. If nothing else, if you see them in the bottom 25%, you really shouldn't be part of it. So what I wanted to do is show you this little chart. I know you can't really read it because I had to shrink it so I could get a lot of the data in. But this is from our market trend advisory. And this column here is our indicators for NASDAQ-based individual stocks and non-index ETFs. In other words, you're not buying the QQQ, but other ETFs. It could be like Nail, which is like one of the home builders, or I can't think of it offhand. Anyways, this has been basically, we use all this information in our system, and it's been basically, if you look closely here, it's either we've been in no positions or just pilot positions. And for the last, since looks like the 17th of February, it's just all no positions. And when we had some, it was to sell and get out. So this has been really helping us. And we're also in the strongest stocks. So this is really showing that it's not been working at all for most NASDAQ stocks. So over here, I'll show you what's been really happening. This is just part of my big growth watch list I use every week. And this is just the performance on Friday, on the 11th. So you can see here, these are all names that were huge winners for years. We're talking Netflix, Five9, Airbnb, Tesla, Adobe, Viva Systems, Roblox, Twilio, Roku, The Trade Desk, Neo, Coupa Software. You may not know some of these names, but if you've been investing in growth stocks for a while, these are all huge winners for a long time. We're talking, thousands % gain in some cases. And they're now just all broken. So this is just performance on Friday. And this is, we've been going down for a long time. Here we are, 6, 7, 8, 9, 10%. And the Trade Desk has been a huge winner. I was an early investor in this. And it's just, we're down almost 10% just on Friday. So what I wanted to show you here is, here's just a few of them. Here's Netflix, and this is just from December. We hit a high of 700, and here we are at 340. We're over 50% drop in this. And one of the things we're always looking for, as you'll see, as part of our service, is we're trying to buy stocks breaking out of bases, and we're always trying to buy the strongest stocks. Well, here you can see at one point here's this little line here. I was looking at the stock to buy it coming out of the base, and it was a good buy, but it ultimately failed. And when you start, and there's a lot of sell signals that are going on here. So as a stock investor, individual stock investor, if you understand all the rules, you would never be part of any of this. You would have been probably long gone here, definitely gone here. And so you would, sure, you'd be maybe off 10, 15% of the highs, but you wouldn't be down 50%. So there's a reason there are rules, because a lot of investors don't understand them, and they don't know how to invest, and they keep buying the dips. They buy this dip, and then of course it chops them in half. Then they buy this dip. Oh yeah, look, it's down another 25%, so I'll buy it. Sure, there was a little pop, but now we're making new lows again, so you lost all the gains. This is what Kathy Wood of ARC Funds is doing. She keeps buying all the dips down and down and down. Her I think she made new lows on Friday again, and it's on like 60%. That's like for one of the top fund managers in the world, getting acclaim from everyone, to be down 60%. That's not top. That's like terrible performance, and it's actually embarrassing performance. But she's stuck to her guns of trying to keep buying the dips and buying the best disrupting stocks. But they don't mean they always go up. So sadly, hopefully none of you are in that fund, because you're just getting handed losses. So one of the things I'll show you a few more too. This is Neo. This has been one of the stars of the electric vehicle, along with Tesla. But look, it was at 55, and now they're down to 16. In fact, just in the end of December, January, you're down 50%. It was at 32, and now we're at 16. So again, there's a lot of sell signals and things going on here that would, in our service, we'd never be part of this. If we had bought it, it looks like we had a little base that formed here. We might have bought it here. I don't remember if we did or not. but we would have been out. It would have it failed, and then you definitely been out somewhere around here, and it never really formed anything real viable. Maybe here, but again, it would have been a quick in and out, and you would have been long gone by the time this happens. One thing we're actually doing is we're wrapping up the production of a whole video course on the selling rules. It's the first part, and then we're going to have also buying rules, and then money management, and sort of like position sizing, things in those along those lines. So that's going to be ready sometime in the next few months, and we'll let you know. But that will help. It's also the hardest part. When do you sell a stock? And so that's why we've started off with that one, and that will sort of give you a lot of the rules that would have kept you out of some of these disasters. And also, you know, if you understand the rules for selling too, you might have been selling somewhere around here, even if you'd bought it, you know, at $50 or something, and held on somehow all these years, it would have probably got you out somewhere in around here. And definitely you would never have been sitting through all this. Another one, Viva Systems, it was at 343, we're at 174. Just another 50% chop. I think there's a few like Peloton, which is down, I think, close to 90% now. And even, you know, people think, oh, these stocks like Apple and Amazon and you know, Google, they're never going to go down 50%. Well, and they will, and they probably are in the process of it. Here's Adobe Systems, another mega cap, one of the big stars of the market. And here we are. We had a sort of this is just a daily chart, but it gave a blow off run, and we're down from 700 to 415. So it's the whole final move. It's already given all of it back, going back almost a year. And it doesn't look like we're near the bottom because we're making new lows. So that's what part of the service is doing, is kind of teaching you how we invest and what to look for. And we will never be sitting through this. You'll never see one of our stocks down 40%, 50%. And the only way that would ever happen is that if it gapped down overnight on that, and then we would be immediately out. So we would never be holding anything like this. So okay. So we're gonna. That was our little lesson on the stocks. One day we'll also probably maybe soon I'll do a little couple tutorials, or I might give you some of the few things from our upcoming series. So we're talking about what these sell signals are and how to have avoided some of this mess if you found yourself in it. Okay, so we're going to go ahead and I'm going to pause for a second. I'll come back and we're going to look at the stocks on our watch list. Okay, so we're back, and this is the first stock on our growth stock watch list. Now, again, most of these stocks, the RS rating is in the upper 90s, which shows, and this one's a 97. Sorry, before I start, this is the ticker's WAVD, and that's Wave Dancer. And they're an information technology service company to governments and commercial organizations. Interestingly, this is one of the few tech stocks that's actually showing up on our list, and it's an IPO. And it's showing some pretty good strength. So we don't really like these under $10 stocks, but this one does show a lot of accumulation going on here. So we've got it on our list. So again, it's an IPO. It's on our watch list just because it looks like it wants to break out of this base. And we're kind of creeping up here, which is good. We're making the right side of this cup. And we're not quite there, but look, we're getting a lot of days up in a row, and that are up days. Look, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 or 11 days up in a row. That's really pretty good in this market, which has been heading down, you know, pretty sizably. So this is definitely bucking the strength, which is why we're getting a high RS. So what we really like to see is the stock to kind of approach its old highs. It could go above this, but this has been where the sellers are kind of lurking. It hasn't been able to get above 550. So ideally the stock will get up here and just kind of calm down a bit. We'd love to see the volume just really drop down. We always talk about that when it's up near these things. We don't want it to come flying out of here because it's still too volatile. We have these huge moves that have happened, especially this one closed near its lows. It's still pretty volatile, even though it's a yeah, we don't want, like, let's see, each day. This was a 6% move. This one was a 4% move. That's not too bad. Yeah, so we want to see it calm down and sort of get rid of the sellers. If we can be up, float around here for a while, and the sellers are not kicking it down, that's a great sign. So it is a low price stock, so it's not ideal. The average volume is only 159,000 shares, so it's a little on the thin side. So you kind of have to expect that you're going to get some volatility around it. But it is it's one of the best performing stocks in the market. So I don't know much about it. I'll have to do a little research, but looks interesting. So we got it on our list, and it's at the top because it's got the highest RS. Okay, so the next one is Genco Shipping and Trading, ticker GNK. And this one we've actually had before on our list, and you'll sort of notice that you get sometimes the same stocks keep popping up because they keep floating up to the top of the lists. So as opposed to the ones we just showed you, like Viva and Neo and some of the other ones, the Netflix, these ones are making new highs. So if I go to a weekly chart, yeah, you can see that this stock is just about to break out into all-time highs. Unlike the other ones which were down 50, 60%. So it's a great sign, and we have the blue dot. So this is actually looking pretty good because we formed a really nice base here, a really nice cup. It's not like truncated. Sometimes you get this the left side come down, and then it just shoots straight up, and then you get this kind of a weird shaped cup. I don't think I can draw. Let me see if I can draw a line. No. Let's see. Yeah, sometimes you get that, and then it just kind of keeps doing stuff like this and just takes off. And these kind of cups that are oddly shaped, like chopped off of one side, they tend to fail and not really work. They're higher risk. But when you see a nice cup like this that's forming the right side, and now we're getting like a little handle, it's actually a great sign. The handle means that we're getting near the old highs, and we love to see like a little shakeout. In other words, it comes down and then rallies all the way back, got rid of these sellers that were floating around here, and then take off. So this is way up in the top of our list. We also like it because it has really strong earnings and sales. Look at this, up 805%, the sales up 92%. The prior quarter up, let's say they had earned 3 cents, and a year ago, and now they were $1.44. So huge earnings and sales. The margins are huge. Look, 46% margins. I mean, that's really, so this is hitting it all cylinders. So we're watching this one too. This will probably be one of the first ones we will jump on if the market improves. But if anything else, if the market keeps going down and this one just kind of stays around here, that would be fantastic. It means that likely when the market really turns around, this is going to take off. Now it could do this. Unfortunately, we've had so much rotation in the market over the last year. If the market does take off, they might just sell all these stocks just because now they're piling back into the beaten down tech stocks, or who knows what they're piling into. And so all the ones like the oil and gas and the shipping and the chemicals, they all get sold to buy the other things. So that's why we don't want to buy them early. Like, you don't want to buy it now because you want to see it break out, and you want to see it break out on a nice strong volume. So that's that one, and that's just another one of those rules that we use. So the next one is Sigma Lithium. This is another chemicals one, but this is an interesting one too. It's an IPO that has been pretty choppy trading, but it's still got an RS of 95, and it looks like it's just forming the final part of this cup. So we're going to watch it. Doesn't really have much in earnings and sales, so in fact, if you look over here, you can see that it hasn't made any money ever. And it's a little bit on the thin side, but a lot of these chemical stocks, especially because lithium's used in batteries, it could be a good place to be as the electric car sort of revolution continues on. So that'd be something that works out. So we'll watch that. It's not ready yet. The next one is Molina Healthcare. This is ticker MOH. This one, it's been a little choppy. It hasn't really done a lot. It's one of these ones that makes a base. Here we had a cut base, and then it made a base on base, which means that just kind of went up a little bit and formed another base, and then went up a little bit, formed another base, and then this base This is actually constructive. It had a base, but this one actually broke below the low of this base, and we restarted the count. So we're back at a stage 1 base, and now we're making a handle here with a little bit of shakeout. Like, you kind of drop down, rally back, drop down, rally back. This one was a good day. It dropped down and came all the way back up to the high of the day. So, and it's kind of getting tighter and tighter, but the volume's still a little elevated, so it's not quite ready. But we're watching this. This looks like it's doing pretty well, and the relative strength is right. Line is rising too. So that one's another promising one. Sort of the next one, HCA Healthcare, ticker HCA, is sort of in this. Healthcare seems to be, we have actually 3 healthcare names on our list, which is interesting. Could be sectors that are moving up the industry groups. Here we are 52. I think the previous one was in the 40s, so they are in the top 25% of industry groups. So this one's similar. It's kind of made a little double bottom base, then it came down, broke that because the market's been poor, and then it's made a new cup base, and looks like it wants to form a little handle. It did try to break out on Friday, but it came back down. But volume's been good. There's no real big sell signal, so we're going to watch this one. And the whole healthcare system, we start seeing more of these starting to form bases. That's a good sign. So the next one is Eli Lilly, another healthcare, and it's kind of looks similar. We have base and another base, and then so they're all kind of doing the same thing, but we're getting nice relative strength that's rising. So we're going to be watching this. It still needs to complete its base there. So the next one is Hewlett Packard, which is interesting because it's a tech stock, and it's doing better than most of these tech stocks. So this is HPQ. It's a ticker. It's formed a very long base here. Really, it's not a very volatile stock. It just kind of tends to move in a small move. But it looks like we're sort of setting up a double bottom here, and we'll continue to watch it. It's not ready yet, but it's interesting that that's popping up on our radar. We just have a few more. We have JB Hunt, JBHT. That's a transportation stock. Looked like it was trying to make a stand on Friday, and it ended up pulling back. Looked like it did make a new high for this little part of the base. Yeah. So, and earnings in 37 days. That's fine. It's still far away. So we're going to watch that. The relative strength is getting a little lower. They're just not performing as well, but they're sort of the better stocks that we're seeing. Next one is American Financial Group. This is an insurance company, along with the next one. That whole sector seems to be doing pretty good too, but kind of stuck in a trading range. We'll see what happens. We'd like to see it break above this 143. We have 143.25 as the buy zone. So we'll see what happens with that. And again, these are all the RS. I'll go to the weekly chart here. And we're getting the relative strength outperforming. So this could be a sector that, so we have 2 stocks on it. That's a good sign. And our last stock is Selective Insurance Group, ticker SIGI. Similar looking chart, maybe a little bit better looking than the other one, because we've got a little handle here of a low. It's like a low handle in this base. So a break above this would actually be clearing out a lot of the sellers. Let's see if I can draw a line. There we go. So it's kind of like right there. You can see the stock got only back here in August. It got above this 80, 83, 84 level, and then sellers came in. We had one day, who knows what happened that day, but it wasn't earnings because that was over here. It didn't really have an earnings reaction. Something happened there. It sold right off. And we came back up to this 83, 84 area, sold off. And now we're hovering right below it, which is a good sign. And we're not really getting, the sellers are not really pushing it down. So my guess is at some point it's going to break out over here. And we've cleared out a lot of the selling that has been lurking right at that level. So we're going to continue to watch that. So That's about it for this week. We're always looking for the best stocks and of course, a better investing environment. And we'll be back next week with hopefully some new positions we're in a better environment. But we'll see. All right. Thanks. Bye-bye.